You may have heard that fine wines become more expensive with age because it takes many years to reach such a uniqueness level. The same goes for investments. If you want to make them unique and more beneficial for you, you need a long time. But there are a few things that you need to know about investments, especially if you are planning to make a long-term investment, to make your retirement easy. Hello 101 community! Welcome back to our YouTube channel. In this video, we're going to tell you how to make money work for you. Before we begin, if you are new here, make sure to subscribe to our channel and turn on notifications to never miss any updates. Difference between speculator and investor. Warren Buffett has explained the difference between the speculator and an investor. If a person buys a stock and does not care about whether the stock market is closed, even for some years, they are an investor. Now, you may be wondering why that is. Actually, the focus of the investor is always on the long term, and he wants to build a business in order to get a handsome return, either in the form of capital appreciation or dividends. On the other hand, if a person cares about whether the stock market will open tomorrow or not, he becomes a speculator. Another financial expert said that the main difference between the speculator and the investor is that the investor always researches the stock and does due diligence on whether the investment will grow over time and will give a good return or not. On the other hand, if you just put your money in an asset like stock after getting a hot tip from your relative or broker, that makes you a speculator. If you want to make a long-term investment, you should not worry about ups and downs. The stock market is highly volatile, and that's why most people get disappointed as soon as they see the value of their stock going down. Those who handle this situation well and do not make a wrong move get the best out of their investment. The main purpose of long-term investing is to get a handsome return. Most people try to invest for their retirement so that it can become financial security for them. Risk is always attached to the investment. However, some assets have a higher percentage and some have a low percentage. But the important thing here is that you should not make your decisions based on emotions. Even if we talk about the real estate market, most people believe that the real estate market has the least risk of failure. But even this market saw its worst position in the 2008 financial crisis. Now, you may have a question. How can you make money when there are a lot of risks? Well, the best thing about long-term investment is that it exhibits lower volatility than short-term investment. So you don't need to worry about the short downturns in the market because you are putting your money in and holding your assets for a very long time, like 10 years or even more. Stocks investing. If you want to invest in the stock market, it should be a long-term investment. Stocks can be very beneficial for you. For instance, you do not need to manage a property or a business. All you have to do is just buy and hold. Buying stock gives you ownership of the company, and you can get a certain portion of its profit. Now, one important thing to remember is you have to adopt a diversification strategy for wealth preservation. What does that mean? It means that you do not need to buy the stocks of just one company or sector. For instance, you do not need to put all your money into the technology sector. Otherwise, you might face a massive loss. Instead, you should buy the stocks of different companies. It will hedge your risk. There are two main categories of stocks. The first one is growth stocks, in which the company tries to reinvest profit back into the business, instead of distributing the money to the stockholders in the form of a dividend. So how does it benefit the stockholder? The stockholder will get the benefit in the form of capital appreciation. Talking about long-term investments, you can also invest in the blue-chip stocks, like the stocks of Salesforce Inc., CRM, Pfizer Inc., PFE, PepsiCo Inc., PEP, and Berkshire Hathaway Inc., BRKB. The second one is high dividend-paying stocks. The companies that fall into this category are more stable and mature, And if you do not want to take much risk and want to get a consistent return, this might be the perfect option for you. For instance, the average yearly stock return of S&P 500 is 10% per year. No matter what happens, either the stock market crashes or there is a recession, the value will be the same. If you liked this video so far, press the like button and subscribe to the channel. Also, if you want to develop yourself financially and want to take your future into your own hands, check the links in the video description. Bonds investing. If we talk about long-term bonds, these are usually up to 10 years, and people prefer these bonds to get the interest. Due to the long-term investment, the companies pay a higher yield. The average yield in the last 10 years is between 6% to 8%. Investment in mutual funds. In mutual fund investing, you do not need to be practically involved in the operations. For this purpose, you have professionals doing the job. This professional will pick the top 20 or maybe 30 companies to put your money in the pool. Only about 22% of the mutual funds outstrip for about 5 years. Art investment. You might be surprised to hear that many people invest their money in art. Some arts are more valuable. Now, you should have an exact idea of what you are buying. It's about research and due diligence. The art investment is considered safe and bulletproof, and NYT acknowledged this fact this summer. Even the top companies' stocks like Apple, Google, and Amazon plunged about 20% to 35% for the year. Art investment is considered a hedge against inflation, and it has been celebrated for a very long time. Also, the value of the art increases over time. If you don't have any idea how you can invest in art, Masterworks has the proprietary data, and they choose only 3% of paintings that they receive and put them on their platform. ETF investing. ETFs signify a portfolio of stocks, bonds, and other investments, and they are inertly handled and invested in a primary index. The management cost of the ETF is also low if we compare it with mutual funds. Real estate. Almost every one of us is aware of real estate. People must get the return from this sector in two ways, either in the form of rent or in the form of capital appreciation. People had the idea that real estate was the safest investment ever until the 2008 financial crisis that proved everyone wrong. Still, real estate is beneficial and can give back a big chunk of money if you wait for a long time. Tax shelter retirement plans. This might be one of the best investment tips for those people who are trying to invest for retirement. The major benefit of a Roth IRA is that it gives you a tax-free income. With an IRA, you can withdraw your money without paying any tax, but you must be in the plan for a minimum of 5 years. Also, you need to take the distributions at 59.5 years or more. This investment also grows over time. Robo-advisors. Most people do not have experience with investing, and they worry about losing money due to insufficient research. They can choose this option because robo-advisors handle all the investments. You just need to put some money in the account occasionally, and the platform will manage it all for you. Annuities investing. In the annuities investment, you put a certain portion of money for a particular time. For instance, the insurance company. You put in a certain amount of money, and after a particular amount of time, the company provides you a big chunk of money. The major thing you must know about long-term investment is that you have to diversify your stocks and bonds among many asset classes so that they can absorb the risk of market fluctuation. Otherwise, things could go wrong as soon as the financial crisis hits the market. That's all for today's video. I hope you enjoyed it. If you want to see more videos like this, subscribe to our channel and click on the bell icon so you will be notified of every update. Also, don't forget to check the links in the video description. And while you are here, click to watch one of these two videos appearing on your screen right now. I will see you there. Take care and stay tuned.